Hello, this thing on. Yes, we are. Good. Welcome to the morning show, everybody. Here's the deal. Brian Lund is our guest today. He'll be on at 9. It's Wednesday, so mornings with Mary at 9:30. Excited for that. A lot of things to discuss. Market breadth, earnings. You know the drill. Smash the like. Where's my intro? Let's roll.
Oh, good morning. Good morning. I don't want to dox myself, but I am going to have a very nice meal tonight down in Baltimore, Maryland.
Great city.
Are you eating crabs?
I don't think so. I think it's a French joint, actually.
I don't think it's crab season.
Look at this guy. I think it's like one of those like white glove places, like super bougie. I'm trying not to underdress. I feel underdressed quite often.
I don't do the French food.
What are you talking about?
It's not for me.
Where do you think Italians learn how to cook? Come on now.
Not in France.
Stop it. They invented culinary. By the way, who was the biggest influence on the Japanese? The French.
Napoleon? I don't know. Where are we going with this?
Ready for my life hack? Life hack. When you're in Japan, go to the French restaurants. When you're in Paris, go to the Japanese restaurants. That's how to do it. That's a life hack right there.
And when you're in London, go to the Indian restaurants.
Everyone knows that. Even I know
Everyone knows that. Don't tell that to an Indian dude. Oh, man. When you like an Indian dude from India, you tell them that London has good Indian food, they are not very happy about those comments. I learned that one the hard way. Keep it to yourself, Strazza. Keep it to yourself.
My new coffee maker, fantastic, really good.
Oh, you were inquiring about what to get a few weeks ago, right? Or you were
last week?
You were
It just came.
Yeah,
we break coffee makers like once a quarter. I need a new one. I don't know what we do to these things. I don't know what we do. Yeah, Strazza. James, tell Strazza French food is also. I don't eat French food. What's the matter with you?
No, it's not for me.
Isn't Louis' backyard French inspired?
I mean, dude, it's not French food. That's Floridian.
Floridian. Oh, okay. All right.
new one.
That's a new one. All right. Why don't we hit him? Why don't we talk a little bit about the market, huh, Spencer?
Yeah.
All right. Let's go quickly over the market. We've got not much going on this morning. Dow futures up 40 points, about 10 basis points. S&P futures up 12 handles, about 25 bips. NASDAQ futures up 40 basis points on the day as bond futures are down slightly. Silver flat, copper flat, gold flat, oil up a little, less than 1%. Dollar mix this morning here with the volatility hanging around the VIX around 13. With the U.S. 10-year yield, which I definitely want to talk about this morning, hovering around 4.1%, up slightly with bonds down. Russell 2000 futures back in the green this morning, up 30 basis points. They were pretty much down all night. Bitcoin flat on the day, hanging around near 43,000. Ethereum flat on the day, hanging around 2370. And then in the old Solana down again, right around 95, holding below 100. Total crypto market cap chilling, still above 1.6 trillion. That's your morning rundown.
What is it about bonds you want to discuss?
Well, I don't know if you heard, but the bond market is really important, Mr. Spencer. You know,
that's what they say. That's what they tell me.
What they say. So just to put things in perspective, the U.S. stock market is roughly 46 trillion, right? You can add it up and tell me how close I am, but it's right. It changes every day, but it's right around there. 40-something trillion dollars. The bond market's 130 trillion, right? So the bond market is the bully in the room, right? It's the this is going to be boxing you out, right? Looking for the rebound, right? It's gonna be moving things around. It pushes you, right? The offensive line, right?
Okay, I'm with you.
Kind of leads the way, opens the gaps, if you will. A gaps and B gaps and whatnot. The bond market is it. So I want you guys to weigh in here. Throw up slide 2 here. Here we're looking at the U.S. 10-year yield and U.S. 30-year yields. So the question here is, that last leg higher in the fourth quarter last year before rates, or in the third quarter, I should say, before rates really started to come off and stocks ripped. We're now back to the fourth quarter 2022 highs. So the question is this the kickback to those levels and now rates collapse, or is this move higher in interest rates just getting going? 4.3 on the 10s, 4.4 on the 30s. We start creeping above that. The risk is up for rates, down for bonds. I'm not quite convinced of that just yet, but that's how I see it. Big levels here. No?
Well, my take on this is going to be, that move will depend on, to some extent, what the Fed does and when, right? So,
but isn't this
maybe
market
not,
this
is the long end of the curve, so maybe not.
Isn't this market anticipating what the Fed's going to do? Right.
Well,
remember, the Fed does what the bond market tells it to do.
It's a paradoxical circle, right? It's a dialogue. So I don't know. This is a long run of the curve, so maybe not as much.
Where's Strazza? I want him to weigh in on this. Where is he?
There he is.
There he is. Strazza, any thoughts here?
It's big level.
Big level, right? Are you leaning towards kickback and rollover or scoop and score?
I think as long as we're above 4%, the bias is higher for 10s. And I think, from an intermediate term, it's just sideways. This is pretty trendless.
And a trendless environment for rates, net positive for stocks.
Yeah, I think so. I mean, the market can't seem to figure it out. We see Fed fund futures and they're all over the place. So I really don't have much of a directional bias right now. Range bound. And I feel the same about the dollar.
And what about
it's a bigger range for the dollar. What
if rates rip higher? Good for stocks or bad for stocks?
Listen, structurally, when I zoom way out, both of these potential intermarket headwinds are above their key levels for me, right? But when you zoom in, they're both kind of just messy. Sorry, what'd you say?
Rates squeeze higher.
Yeah.
Good for stocks or bad for stocks?
Bad.
Rates completely collapse here. Good for stocks or bad for stocks?
Depends on what that collapse looks like. If it's really a collapse and we see rate of change, blowing out and some really high readings there, then it's going to be bad. But
so rates rip, bad for stocks. Rates get destroyed, bad for stocks. Rates kind of hang out and churn sideways, good for stocks. Is that right?
I think they can steadily move lower, just without any outsized momentum, right? Like I think they can move a good deal lower. We could be talking about 10s, 3%, and that will be fine as long as the pace in getting there is not unusual.
How about this diverse insight TO over here telling me that the bond market has been wrong for 2 years. Wow. I'll take the under on that one.
I wouldn't say they've been wrong, but I do think it's a fair criticism that the stock market has actually given us better information.
Better information for what though?
The stock market's kind of like forecasting where rates are going.
Didn't when interest rates peaked in October of 2022 and rates got crushed, how did stocks do? Pretty sure stocks ripped straight higher, right?
Yeah,
no?
But then rates made another
and then
high.
when rates started rallying into the summer, into the third quarter, how did stocks react to that? Not very good, right? And
into
then
the third quarter of last year.
And then when interest rates peaked in early October or mid-October, started to collapse, how did stocks do?
Yeah, that was the Q4 rally. I think rates rolling over was just as big of a deal as the dollar.
That's what I'm saying. So it seems to me like they're dancing pretty good together. What do you mean this one's right, that one's wrong? Seems like they're dancing together, no?
Maybe.
Seems like right on cue. I don't understand who's wrong or who's right. No? All right. Here's a good one. Slide 2, please, Mr. Israel. Slide 2. So here we're looking at a ratio of regional banks relative to the S&P 500, which I know there's a lot of newcomers here, is the reason, or I shouldn't say the only reason. It was one of the bigger reasons why we were getting so aggressively short equities in January of 2020 was regional banks on a relative basis collapsing. So let me just remind everyone that this has traditionally been a very reliable indicator, but forget all that. Regional banks relative to the S&P 500 overlaid with the Russell 2000. Is it just a coincidence that these two look the same, or it's not because the weighting in regional banks is so heavily skewed towards small caps because there are no regional banks in the large cap indexes?
Yeah, there's a lot of regional banks in the small cap index. That doesn't mean that small caps are doing poorly just because New York Community Bank is going under.
Agreed. They were doing great until the end of the year, and then that's when they really started doing poorly because small cap tech, small cap discretionary, small cap industrials had been leaders. So anybody who told you last year that small caps were not doing well, they were lying to you, or maybe they just didn't count. One of the two, but small caps did great. That changed this year, right? So the question here becomes, if you're wondering where the Russell 2000 is going to go, higher or lower, should we ignore the line in the bottom, Strazza, or is that a reliable indication of where the index itself is going to go?
I don't think I want to say that the Russell 2000 can't go higher without regional banks. It would make it hard.
It would be hard.
No, not going to say that.
Almost impossible.
No, it's not going to be impossible.
If regional banks are collapsing, Russell 2000 is breaking out to new highs?
Listen, regional banks are in their own mess right now. It has nothing to do with the rest of the Russell 2000, what the regional banks are going through.
How come? Maybe. Agreed. It has nothing to do with the rest of the Russell 2000, but you think it's a coincidence that regional banks are rolling over again on a relative basis after all of the small cap leaders stopped rallying 6 weeks ago?
I don't think all the small cap leaders stopped rallying. I didn't say that.
Let's see. Small cap technology peaked. Peaked in late December 27th. Small cap discretionary peaked. Oh, what do you know? What a coincidence. December 27th.
Yeah, but Jason,
small cap, hold on. Yeah, small cap industrials had been a tremendous leader. Also peaked on December 27th. That was JC, 6 weeks ago.
Stop. They're 2.5% from their all-time highs.
Yeah, how come they stopped going up? Well, while the other indexes, the large caps kept going higher.
We see divergences play out for a month, 2 months, sometimes, all the time.
Yeah, we didn't see that last year.
Things will diverge, like the transports right now.
They didn't diverge like this last year.
What happened? What happened to the Let 'Em Dance guy? Where did he go?
I say it every day. Let him dance, baby. Let him dance. Yeah. I'm good. Let him dance. Wait, listen, the only way.
I want to be clear what JC is saying. I want to just clarify. You're saying hands off small caps until the regional banks turn around relative to the S&P.
I don't agree with that.
You're saying? Is that I'm asking?
I didn't say that, but yeah, I would agree with that, Spencer.
How about just don't buy regional banks? Isn't that easier?
Or a small cap index stuck below overhead supply.
Yeah, don't buy the index either.
Right. Okay. So you're agreeing with Spencer and me. Look at Strazza agreeing with all of us. Look at that.
Let's just
Spencer, go to the next chart.
Let's run through all the new highs in small cap industrials.
Hold on. Settle down there, Baba Louie.
Okay.
So, contrary to popular belief, regional banks are not the largest component of small caps. It's just that it's really obnoxiously skewed because there are 0 regional banks in the S&P 500, 0 regional banks in the Dow, 0 regional banks in the NASDAQ, right? So the fact that there are 200 something regional banks in the Russell 2000 skews it very heavily. So let's take that out of the way and let's look at the largest component of the Russell 2000 here, which is technology, representing 16% of the index. When you overlay a ratio of small cap tech relative to the S&P 500 with the Russell 2000, they look very similar. So here, as the small cap tech is pushing down against new relative lows, is the line on the top going to go higher, or is it going to follow the line at the bottom? Question.
just want to qualify. There are regional banks in the S&P 500. Maybe not nearly as many as the smaller and mid.
How many regional banks are in the S&P 500? Go.
All the big ones: KeyCorp, M&T Bank, Regions. Not going to sit here and count them all, but
all right. I take it back. There's more than I thought.
Yeah.
Citizens, Truist.
Yeah.
Those are the super regional.
Those are super regionals. Those aren't actual regional banks.
Oh.
So so by definition, there are no small cap regional banks in the large cap indexes. We can agree to that.
Sure.
Most regional banks, by and large, are in the small and mid cap.
Like Biotech, similar like Biotech.
Yeah, a couple of them trickle in to large land, but yeah.
I think we remember we did a study where like how many biotechs are between 20 and 30 billion in market cap. There were like 2, or there like 1 or 2.
There are a handful.
Like that's just right. Like these marine shippers are never going to be $1 trillion company. Like they're going to live in this like small mid cap world. Like there are certain industry groups that's just where they live. And I think it's important for us as investors to recognize that. Now let me ask you, Strazza, because this isn't something we've discussed before, at least not on the show. Small cap tech pushing down against new lows relative to the S&P, overlaid with the Russell 2000. Looks exactly the same. Probably not a coincidence that tech is the largest component in the Russell 2000. Ignore this completely. This doesn't mean anything.
They've been really good. What do you want?
Who's been really good?
First of all,
wouldn't
anything
small cap sector
and any small cap index, this is the wrong benchmark. Any small cap index versus a large cap index is going to look bad.
That's what I was trying to say. Yeah, when they all look the same,
they're all going to look bad. Even small cap
but when they look bad, the Russell 2000 also looks bad. When they look good, the Russell 2000 looks good. So,
I guess maybe.
What do you mean you guess? Do these lines not move together?
Look at small cap industrials relative to the S&P 500. That's been a great place to be. You can't outperform the S&P 500 when the biggest stocks in the index are crushing it the way they have since last year.
On many occasions during this bull market. In fact, in the early stages of this bull market, small cap tech was outperforming. The Russell 2000 was outperforming. This spring, small cap tech was outperforming the S&P 500. So don't give me that shit. That's just bad math, Strazza.
Dude, you get some tactical rallies here, but the trend is lower. It's small cap versus large cap relationship.
Yeah, but it's making new lows now. So it's not like, it's a range bound or it's correcting. It's 2% from highs. It's new lows.
Yeah.
So that doesn't matter?
Nope.
All right. All right. So, again, just a couple of quick things, and then Strazza, you can tell me how wrong I am. So I was just taking a look at the S&P 500, the Dow, and the NASDAQ, pushing up against new all-time highs. We got new all-time highs in all of those last month. We even got new all-time highs in all of those last week. However, when you look at some of these other indexes, we're just not seeing it. 4% basically pretty much for the NASDAQ and the S&P 500 so far in 2024. Small cap Russell 2000 is a negative. The mid cap S&P 400 is negative. Equally weighted S&P 500 negative. Developed markets ex North America EFA negative. Emerging markets EEM with China's rally yesterday still negative, all down for the year. Most importantly of all of those, in my opinion, consumer discretionary, which had been a leader from the beginning, one of the first to bottom and start ripping higher in June of 22, also down for the year on both an equally weighted and a cap weighted basis. So it's not just the Amazon and the Tesla, it's across the board. And I want to make one more point.
Mm-hmm.
I think this year-to-date returns are actually more valid than they were last year. Remember last year I was bitching all the time because people would, cherry pick year-to-date returns, but it was very skewed and obnoxiously so because you got rotation into tech and mega cap growth in the first week of the year, remember?
Yep.
So the better anchor was to October of 22 or maybe even to June of 22, not year-to-date, remember?
Well, why are you using the year-to-date as an anchor now?
Because the last week of December, you had a lot of tops. A lot of these small cap indexes peaked. The advanced decline lines peaked in late December. You can also anchor to December 14th also. But nevertheless, I think year-to-date numbers this year will be more valid than, way more valid than last year. Last year was all bullshit.
100%, because everything peaked from the December 27, 28, 29, and then you came into the beginning of the year and you
I
had
think this year it does make sense. Last year it does not.
But I think a little bit of context here. All of the stuff that you just said is down for a month and a week now.
That's right.
Ripped 20, 30, 40% off the October lows, and now is giving some back for the past
Strazza,
month.
I remember we were long. Remember the joke in our meetings was that we weren't long enough. Remember?
Right.
I'm good. We were
so
good.
I think maybe the more fair thing to do would be to like fib out the advance from the October lows to those December highs, and say, hey, look, we haven't even retraced 38%, or in some cases 10%, 5%, some of these indexes. So do we want to go and run and hide in the bunker? I don't know.
Who's hiding in a bunker?
Standard stuff.
Am I one of these preppers? Am I one of those? You think? No.
You telling everybody to buy canned goods?
First of all, I don't tell anybody to do anything, and there's a good reason for that. It's because I don't give a shit what other people do with their money, right? That's not my problem.
But you understand what I'm saying. We had a big advance for a couple of months, right?
I was there.
Corrective. Some things are correcting better than others. Like Larry just mentioned, Biotech, they look great, nice and tight here. Some other areas have given back a little bit more. IWM retraced 38%, dug in, bounced from there last week. So nothing's like, collapsing beneath the surface.
How about the fact that the new highs list peaked almost 2 months ago? That's going to be next week is going to be the 2-month anniversary. The 2-month meniversary. Would that be the proper nomenclature? Meniversary? 2 months.
Yeah.
Weren't you an English major, Spencer?
No.
Sound like one. Certainly look like one.
All right.
So no, is it a meniversary? 2-month meniversary? Because an anniversary is annual, right? That I know. No, nothing. All right.
There's really nothing in terms of new lows though yet, right? So like yesterday, you got 10% of the S&P 500, almost 11% of the S&P 500 at a new 1-month high. Compare this with 10 days earlier, it was 16%. But the percent at 1-month lows yesterday also just 10%.
Yeah,
right?
we're not seeing it. We're not, to Strazza's point, haven't seen that expansion in the new lows list. Any of them.
Even small caps, 13% at 1-month lows. Like you got to do better than that, Bears.
Agreed, 100%. Couldn't agree with you more. That's right. But correct me if I'm wrong. What you normally see is the deterioration in the new highs list and then the expansion in the new lows list, right? To your point, so we haven't seen the expansion in the new lows list yet.
That would be the next step in this bear sequence.
That's right. Agreed.
We'll see.
Yeah. I agree with Strazza wholeheartedly. Look at me agreeing with Strazza. Come on.
Hey, look at us. Huh?
Look at us. Look at this. How do you feel about that, Spencer? Is that allowed?
Look at you guys. You guys are like just, one. You're just one unit.
Cubans and Italians have a lot of similarities, right? You know what I mean? Like
we get each other.
Talk with your hands, eat a lot, drink too much, right?
Yep.
Party, very loud.
Yell at each other a little bit and they'll be like, all right, love you, bye.
Yeah, we're not even yelling at each other. We're just loud. Like it's more of like
this is an East Coast phenomenon, not so much. Maybe not unique to the Cubans or Italians. This is just.
I think that's fair. JC spent too much time up in Connecticut in the tri-state.
No, I grew up with Cubans, and then I go to Connecticut, and I got these Italians. Like all my best friends are like Angelini, Maisano, Mancuso. Like there's so many vowels in my best friends' names. So. And then I started meeting like their families and their grandfathers and stuff. And I was like, yo, this reminds me a lot of they wear the same wife beaters, they're eating all day, drinking all day, yelling at each other, but they're not actually yelling at each other. That's just how they talk.
It's how we communicate.
I felt right at home. I felt right at home with these Italians. They'd bring me home for Easter. I'm like, yo, this is crazy, yo. I didn't even know what a cannoli was when I got to college.
And it's funny real quick. Because I learned the same thing even before I met you, just from being down here. With all the Cubans. Oh wow. Okay. God. Cool.
All right. Yeah.
Cool.
So we got BC Lund in the house.
We do. This is going to be a fun segment for me.
Why? We're going to talk about pod stocks and SPACs.
When I saw the charts that Brian sent over, I got very excited. So yeah.
Oh yeah, he's going to bring all the blue chips.
That's right. That's exactly right.
Apparently, Kenny Glick is the authority on how to pronounce VWAP.
Kenny Glick is the authority now.
Kenny Glick is the authority.
Okay.
I'll disagree with Brian and I'll make fun of him all day, but he's the authority. No?
Yeah.
So you want to do like
Uber.
Yeah. You want to just bring Brian on?
Yeah,
we
bring
can
him
bring
on.
Brian
Bring him on. He's
No
all good.
Uber?
Yeah,
You
let him
want to
come
do the
hang
Uber?
out.
The Uber. I mean, we can do Uber now. We can do Uber later. It's
Just bring him on.
Bring
All
him
right,
on.
bring Brian on.
Brian, you ready? I hope so. I think he's ready. Okay, cool. He's ready.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. BC Lund.
There is something fundamentally wrong with any statement that starts with Kenny Glick is the authority of.
He's funnier than you and me combined, though, BC.
100%
We'll
on
give him that.
100% on that.
Give him that. He's the authority. He does definitely way more voices than I can ever do. Right? He's got the Russian guy. He's got the Italian machismo guy. Like, it's really funny.
How many voices you have in your pocket, JC? How many can you do?
I got nothing.
Like northern Cuban, southern Cuban. Is that like those are your two?
Cuba goes east to west, right?
I say there is no north and south, is there? I'm showing my lack of geographical skills right
That's
there.
right. Yeah. So yesterday we were wondering whether Todd Sohn was the guest who had been on the most, and Spencer came out with the fun fact that Todd Sohn was tied for first with Brian Lund. Does Brian now take the lead again now that he's here, Spencer?
No. What I meant was that they're both perennially tied because they tend to come on back to back. So
Todd Sohn took the lead for one day. Brian Lund tied up again with the number one spot there. Do I have that right?
Yeah, that's correct.
If there's anyone I would like to be tied with, it's Todd. I love Todd. He's great.
So good. I'm very particular with counting around here, Brian. I don't know if you heard, so I just want to make sure we got the math right.
Yeah. So look, before we get into this, in the last couple of weeks, I've heard your name associated with a lot of scandalous, talk, and I want to clear the air on a couple things.
Scandalous?
So, yeah, scandalous? Right. Like some out there ideas. Before we get into the market related ones, tell us your position on breakfast for dinner.
Oh, I don't like it.
Me personally,
I saw you on Trends with Friends not too long ago.
Yeah.
And you were telling a story that you said your wife was asleep, your boys were asleep, and it was you and your daughter, and you were hungry, and you were you made eggs, and her head exploded, right?
Oh,
she couldn't get around the fact that you were making breakfast for dinner. Now, I'm a fan of breakfast for dinner.
She's only 3.5, so she's learning new things that a lot of us take for granted, obviously.
Right.
Wife was upstairs with the boys giving them a bath. So she had already eaten dinner, but I forgot. Maybe I had to work late. I forget. For whatever reason, I hadn't had dinner, and it was kind of one of those like leftover days where we were just eating leftovers. But I didn't want leftovers, so I was.
That's one of those days where she says, "Daddy, go away from the charts. Pay attention to me." Right?
Something like that. So I was like, "Come on, help Daddy make breakfast." She's like, "Breakfast for dinner?" I'm like, "Hell yeah!" She's like, "Whoa, you're making eggies?" Yup. So she learned that we can have breakfast for dinner. And she learned about sunny side up eggs because Daddy made the eggs for dinner. Mommy usually makes them scrambled. So then she loved the sunny side up eggs. So now Mommy has to learn how to make sunny side up eggs, which is also funny.
Okay, nice. Now, see, my daughter likes them just, you get them sunny side up and you turn them just for a second, right before you serve them. But
over easy.
Yeah, over easy. That's right. And you know what I love about that story? I mean, I'm busting your balls a little bit because you guys pre-busted my balls before I got on, but I love that your daughter was like, it was so new and revelatory to her. She's like, this is great. And I feel like more people in the stock market, more people in finance should have that attitude. Stop being so narrow-minded in what you think is possible or what is going to happen, and open your mind up. There's lots of opportunities all around you that you may not see or may not be tuned into. And I think it's great having that childlike, excitement about new things and new opportunities.
Is that the scandal you heard about?
Well, that's number one. So the second scandal is, this happened like maybe 2 or 3 weeks ago. It's weird. I was just walking down the street. Someone yelled at me, "Hey, JC has turned bearish." And I'm like, what? And ever since then, people keep hitting me up and they're like, "What's up with JC turning bearish?" And to be honest, I don't really follow you or pay much attention to you. So I didn't know what was going on, but I looked into it a little bit. And it turns out that you're a little bearish here. So I'd love to hear more about that. I mean, I know what it is, right? You're probably seeing the internals are weak. There's not breadth, but I want to know more like, what do you think will happen in terms of if we do get a correction? You think looking for a big correction, a minor correction? What's your outlook there?
I think a nice little rug pull. You know, we bought puts in the Nasdaq and the S&P 500 for the simple reason that I believe that we could sell them to somebody else at a later date at a higher price, right?
When?
Much higher price, in fact. You know,
When?
I don't know what's going to happen. Contrary to popular belief, I don't have a crystal ball, right? We could just take the data as it comes in, but I can see a situation where come St. Patrick's Day ish, you know, spring is turning, everyone's bearish. You know, the sentiment indicators that are off the charts right now have settled in. We've gotten a nice correction. Those that had too much leverage to the long side got wiped out. You know, that sort of scenario where we're buying the dip. One of the things we were talking about on our conference call this week is making that shopping list. You know, let's remember we're 18 months into a raging bull market. We just had a banner year for the stock market. We just had a 20% move in the Dow in 3 months. That's over 6,000 points during, by the way, the best 3-month period of the year. So anybody who's surprised by that clearly hasn't done the homework. That was actually perfectly normal. What would also be normal is, you know, that hangover into January where the market continues higher, but very few things participate. And then you get the rug pull in February. Again, that would also be very normal. In fact, if that didn't happen, that would actually be weird. So, you know, we're just going with what the data is suggesting. Breadth deterioration, new 52-week highs list peaked almost 2 months ago. Advanced decline lines, new highs list, all deteriorating. To Strazza's point, what we have not seen in terms of like bearish action is an expansion in new lows. We're not getting, you know, 1 month lows, 3 month lows, 6 month lows, like 52-week lows. Like there's no reason to look at that anytime soon because stocks are nowhere near that. But 1 month lows, 3 month lows, we want to be looking at that. Haven't seen any action there at all.
So, Steve, are you on board with this?
Not at all.
Okay. I'm just curious.
No. I might get there, but I need more.
Yeah, I mean, this market has been so resilient, you know, and
Which market?
I was listening. You're going to say this is wait. I know where you go on this, right?
Be careful,
say,
Brian.
I know. I know the traps. I think now. I think I know him now. I've been on here as many times as Todd Sullivan, so I think I know him. I was listening to you on Spaces yesterday with Patrick, Steve, and you made a really interesting point about the action in I think TLT and the dollar and everything, and you know we'd seen that correlation, and then we kind of broke the correlation. I think a lot of people, myself included, thought, okay, well maybe this is a heads up that we're going to pull back. But you made the point that like the fact that the market hasn't even budged, maybe telling us there's much more resilience, much more appetite in the market, and then if TLT and Dixie start going back in that direction, we may get this market just, and I'm not saying it's going to happen, but I hadn't really thought about that until I heard you say it yesterday.
Yeah, I think that goes back to what you were just saying about being open-minded, right? It's one thing to say, "Ooh, look at the dollar; it's moving higher again." We know how strong the correlation's been, but what about, hey, look at those 2 candles in the dollar, those 2 big green sticks, and stocks are still making new highs at the index level. You know, I would expect 2 big reds.
You see, my friend, that's the key there. At the index level, stocks are making new highs. How come no actual stocks are making new highs?
They are. I can read them off to you. Plenty of stocks.
It's not going to take you very long. Certainly not going to take you as long as it would have a few weeks ago, and a few weeks before that, and a few weeks before that.
More than 50 stocks have made a new 52-week high every day.
Is that more or that more or is that fewer?
Let's just go back. So 5 days ago, you wanted to get bearish and buy the puts.
I didn't want to do anything.
You did.
I did.
25% of the S&P 500 made a new 1 month high 5 days ago.
Is that more or less than what we were seeing before?
25% is the highest in the past 10 days.
I should bring a book for these video things.
The point is we're getting at least 50 to 100 stocks to 125 even making new 1 month highs.
Is that more or less than we were seeing before? Is that more or less? Are we seeing breadth deterioration or breadth expansion?
You know, it just goes back to what we always talk about. You get the high water mark in breadth, and then you just deal with divergences for the rest of the bull market.
Is that what we're doing? We're dealing, and aren't we just dealing with divergences? Is that what we're doing here?
Listen, again, I'll come around. I got to see new lows start expanding, right? Not only are new highs still
we're going to short more. How's that?
Hmm?
When new lows start expanding, we're going to short them even more.
If that happens, yeah.
Right,
but
if that happens.
the market continues to look just fine, JC.
Which market? I don't know which market you're talking about. Which market?
We ironed this all out yesterday. Go watch
a cherry-picked selection of U.S. large cap index. Is that what you mean by the market?
The S&P 500 is the market because it has to be. That's how we all talk about the market.
All right.
It doesn't mean if the S&P 500 is up one day, it doesn't mean most stocks are up, but it does mean the market is up.
All right. I guess we'll see what happens.
I think it's a good measure for the market because it's a good reflection of what most people own.
The question is very simple, and Brian, I'll ask you because I know how much you love this conversation.
Sorry.
Then we'll start getting into the pot. I know how much you
reading
like
something.
the pot. The question is very simple. Throughout last year, breadth continued to improve. Breadth continued to expand. This year, is breadth expanding? Are we getting more participation, or is breadth deteriorating? Are we getting fewer participation? That's very simple. That's it. And anybody who's taking the time to count will tell you very simply, for the last 2 months, breadth has been deteriorating, or almost 2 months. All right. So, Brian Lund, one of the things that I like that you brought here is a particular sector that doesn't really care what the S&P 500 is doing or the Russell 2000. The S&P 500 could go to the moon, and these pot stocks can still crash.
Very uncorrelated.
And vice versa. The market can shit the bed, and these pot stocks are hanging in there just fine. First of all, why is that? Is it because they're so small, or is there something else?
Well, I think it's a combination of things. I think, they're so small. They've been so beaten down. They've been forgotten about, I think. And also, I think that there's this dynamic that if you have made a lot of money in the last year and the first part of this year, and you're taking some profits, you're going, you know what? Remember pot? Maybe we should throw some money in there. So I think there's a lot of different reasons why they're uncorrelated. But I don't know if Spencer's got the charts that I sent over. But look, the fact of the matter is pot stocks are looking stronger, but only some pot stocks, right? There's a big, when I was growing up, I fell right on that cusp of people, half people in my generation were tech savvy and half weren't. Like some people could program their VCR and some people just had that 12 flashing, right? So pot stocks are the same way. There's two divides here.
That's funny, by the way, Brian. That's underrated right there. That was good. I like that.
Thanks. There's two divides in the pot world. There are stocks that are going to zero that are never going to recover. Like the ACBs, ones that have done like multiple reverse splits and have diluted. And then there's others that are starting to look good. Now, I don't know their fundamentals, but their charts, you can see the difference in the charts, right? So I threw a few over there for Spencer to throw up. I don't really know anything about these stocks from any sort of fundamental standpoint. All I know is that their charts are starting finally to look better after 2 years of a relentless downtrend.
They're doing things that they haven't done before. What is this pot fang?
So there's a guy out there who is a big pot guru. I won't name him. And he, in a presentation years ago at Stocktoberfest, named some stocks that were the fang of pot, right? And so I noted that on the chart.
You talking about Todd Harrison?
I cannot comment on that.
All right.
JC, you talked about these stocks the other day in your call. You just don't realize it because you brought up MSOS. These are MSOS. These are the largest
components of MSOS.
Yes.
Yeah.
Cool.
So there's Cresco, there's Green Thumb, Cureleaf, and I don't know if you brought Cureleaf.
I don't know if you know this, Brian. Spencer is quite the pot connoisseur.
Oh, really?
Pot stocks, I should say.
So
Todd, I sold my Green Thumb yesterday. I bought it, I don't know, a month ago. Just sold it yesterday, actually.
Now, I don't know if you can do it, but like pull up like an ACB, right? Or even pull up a Tilray. Like those stocks are horrific, their charts compared
Why?
to what we're seeing.
What's the difference?
Well, so you can see, pull one up and you can see.
I will.
If you look at like ACB, like there's no indication that a downtrend has even slowed down, let alone broken, right? There's no bottoming formation. There's no double bottoms. There's no higher lows, all the ABC 101s of chart reading.
Brian, what do you think about if somebody doesn't want to deal with the specific stock risk in the cannabis space? MSOS kind of clean above this 910 level. Like, what do you think about just using the indexes for pot?
I think probably as clean as you can get for a pot ETF. I mean, there's a couple of, what MJ is the Canadian one, right? Which I don't think that's going to get much bang for the buck. Is there another one? Is there YOLO or I can't remember. There's something else, right?
Did they delist YOLO? I thought
Did they? Maybe.
There's several. There's YOLO, there's Toke. I think
Huh.
Token
Yeah.
closed.
So I would say I would guess MSOS again. I couldn't speak to the fundamentals of these companies, but I imagine they have better. It's a better makeup and probably doesn't have a lot of these stocks like what's this ABC.
Yeah,
ACB.
well, it's ACB, but
ACB.
it's
Oh,
very
sorry,
simple.
guys.
It's very simple.
Yeah,
Sorry.
Aurora.
It's very
ACB.
simple. ACB, Kronos, Tilray, Canadian companies. Curaleaf, Green Thumb, the stocks
But
that,
it
that Brian's
also
talking about.
SNDL, right?
American companies.
That's is that American
I
SNDL?
switched the
Spencer,
tickers.
why do you know so much about literally the worst industry group in the stock market?
Because it didn't always
how
used
do
to
you
be
know
the
all
worst. It didn't, and they learned a lot. Yeah.
I'm allowed to have interest.
Dude,
Are
I
you
know
asking-
about Strazza. When you were in diapers
Oh my
and
God!
we were
If you
trading
just did this
energy.
to software stocks, it would have been fantastic.
Hold on. I know a lot about these oil stocks and these coal stocks because 15, 20 years ago, they were monsters and they're still like in my head. This is the same thing. These
Steve,
things were
I'll-
ripping. Spencer learned all about them, so he still
Yes.
remembers them.
Yeah, that's basically what happened.
Yeah.
The whole
Steve-
space
Steve.
has been steadily falling and underperforming since 2018. Like it's not like a new thing. This is like 5-6 years.
But
No.
he doesn't forget
No.
the names.
Oof.
Steve, let me tell you why I know so much about the pot space. Yeah, I know so much about it because I bought into the narrative 2 years ago, right? I believed a lot of the narrative and I got involved in some of these stocks and I lost money. And I never remember anything more than when I lose money,
Yeah.
right? And it's a reminder to me. I sent Spencer another chart too, NVTA, right? This is another reminder. This is a stock that Kathy Wood has been flogging forever, right?
Yeah.
Since it was in
Flogging?
its 50s.
Yeah.
What's a
just-
flogging?
It just declared, well, the Wall Street Journal said they're going to declare bankruptcy, right? They just got delisted. Now, this was a stock that whole downtrend, you could have turned on CNBC, you could have gone on Twitter, anything, and people would have told you how this is going to be the next Amazon of genetics. The point is I want these things tattooed on my soul, so I remind myself not to follow the narrative, or at least not to follow the narrative when it diverges from the technicals.
Yeah, that's fair. Okay. NASDAQ Poppy says it was a great group 10 years ago. Dude, there was like no pot stocks listed in the US market 10 years ago.
Well, the stocks that were good 10 years ago are the ones that suck now. Those were the Canadian
You
ones. 'Cause they were the first. to market.
Right.
You had
And,
GW Pharma 10
right.
years ago, and that was the last time you actually had a decent pot stock.
Yeah.
No, man, look, 2020 was good for a lot of things.
That's
all
people that
Anyway,
consider Scott's Miracle Grow a pot stock. Yeah.
oh, whew, boy, did they buy high?
That's a deep
right.
cut, Spencer, right? Come on.
Hawthorne.
Yeah. SMG traded like a pot stock. Actually, it still does trade like a pot
right.
stock. Even though that's not most of their business, but whatever.
Brian, what other groups do you like? You're still buying stocks out here?
Yeah, but forget about that for now. Spencer, can you throw up that Nikkei chart? Like, I'm sure you guys are all over this, but for me, this is a big deal because I started trading stocks in 1985, way back in the Stone Age, and nothing was hotter than Japan. And the Japanese market peaked in 89 and I think dropped 60%. And people said it's never coming back, right? I thought the same thing. 34 years later, 35 years later, here we are just about ready to break out of the mother of all bases.
Yeah.
And I just think it's important. I think it's important to pay attention.
And
Are we breaking? Hold on. Are we breaking out of the mother of all bases, or are we just getting back to those 1989 highs so we can kiss it and roll over?
Yeah. So I said about to. Obviously, you need a confirmation, but like it looks like we're about to. And I think, again, let's talk about fundamentals against narratives. There are structural changes in the Japanese equities market that were not there for a long time that I think are possibly the catalysts that could make us break out. But obviously, price is going to be the ultimate arbiter.
You know, one of the things Todd Sohn said yesterday, which I thought was valid, is, when we talked about that 1989, by the way, for trading since 85, you look good, Brian. Looking good, buddy.
Yeah, it's all AI.
You're older than you look.
This is the mother of all bases.
Hold on, but what Todd said is that in 89 the bubble was so ridiculous that the real estate value of just that one park in Tokyo was worth more than all the real estate in the state of California combined, right? This time around, now that we're at these levels, it's nothing like that, right? Like
Yeah.
we're nowhere near those bubble sort of territories and everything like that. You can argue that maybe the currency has something to do with it. I think we can all agree that it does. Silver, when we talk about the biggest bases ever, silver put in an even probably just as long, I would say, because from 1980 to 2010, so 30 years. Yeah, it was about the same. Silver got back to those 1980, Hunt Brothers highs, kissed it, and collapsed. So, I don't necessarily know that Japan's just going to rip right through those highs like it doesn't even exist. I got to see it. That's, for the record, those 1989 highs have been our target for a long time now.
Yeah. So the actual grounds of the Imperial Palace at that point were worth more than the state of Florida. And anyone want to guess what the PE ratio was on the Nikkei 225? Anyone? Guess?
200?
No, it wasn't that high. 70, right? Which the SPX is traditionally around 26-ish, I guess. So, yeah, I mean, it's been a massive bubble. But again, there's a lot of structural differences in the Japanese economy, the way they do things now than then. So we'll see. But I guess it's just something, look, from a technical standpoint, if this thing does break out, right? And aren't you supposed to take the base and turn it on its side? I mean, theoretically, this could be a move that lasts for another generation. It's slow, but it still could do that.
We're getting in the chat here. Judd TV traveling to Japan tomorrow. Good for you. I freaking love Japan. What a great country. Holy shit.
I only hear good things about Japan.
Dude, Japan is wild. Because, living in America, like if you go to Europe, the real estate's older. People have different accents. The food's slightly different, but it's kind of the same shit. When you go to Japan, it's like Mars. It's like a whole, it's like a whole other planet, right? It's just so different and so freaking awesome. And by the way, they treat Americans. It's not like you're in Paris where the French treat you like crap. Like this, they treat you like gold. Like they really, really treat Americans great.
And make
you
sure
really get treated like crap in Paris. I've been to Paris 3 times, and every time it's been pleasant. So
not me.
Really?
And I try to speak Spanish so they don't know I'm American. Doesn't matter. They just. I just want to. I just get so frustrated. I just want to smack them. It's like, what are you so angry about, bro? Cheer up.
Well, when you lose war after war, it kind of gets you bitter, I guess. So.
The Parisians, man. I mean, listen, I've had nice experiences. I don't want to say that, but I've never been to a country where I get treated worse than in Paris specifically. Not the rest of France. Because you go to Bordeaux, you got a bunch of Germans there. You go to the south of France. Like you go out to the countryside, it's not like that. The Parisians itself, it might be like a New York thing. Like how people say like New Yorkers are assholes. It's not that they're assholes. They just don't want to talk to you because they're busy.
Yeah.
You know what I mean? Like I think Parisians, there might be an element of that.
They're not nice people, and the food stinks. Also, the toilets in Japan, just amazing. So good. Make sure you check out the toilets.
The toilets.
I've had great experiences in Paris. The city in Europe that I really actually had a lot of rude people, shockingly, was Madrid.
Probably the same city sort of thing, maybe.
I think part of it was I was there at the wrong time. I was there in August, and that's when everybody goes on vacation for a month. And the people that were there, it's landlocked, it's hot, they're bitter that they're not on vacation. So maybe that's why.
No, you might be right. Yeah, it's the city. It's like the big city vibe, out in the burbs, people are nice. It's like, you talk somebody in New York versus somebody in the Midwest, they're generally going to be a lot nicer in Michigan than in Brooklyn, right? I mean, it's just what it is. Brian Lund, why don't you talk to me about kind of just bigger picture, right? You brought some pot stocks here. What are you thinking here? I mean, you've been trading for longer than Strazza and I. You've been through a lot of Februaries into March. Yeah.
Look, as I look at the intraday action on stocks, as I look at my list, as I'm updating my list, I'm culling them every single day. I agree with Steve. The market looks strong. There is a gut feeling in me, which I try to ignore gut feelings because they usually don't play out right, that it feels like we have to come in at some point. There has to be a rug pull, but I just, I don't look at the internals like you guys do. I mean, I rely on you guys for those things. So like, I don't see it in the everyday action on the stocks on my screen, but it does feel a little long in the tooth. I had a position, how you say like, what was it, Luna or something? You said you had way too much of, right, at one point, or something. I had way too much kava, right? So I just peeled off a big chunk of that yesterday. The chart still looks okay, and I did pull back my nuke and uranium stocks just because I want to reassess. I think there might be better places to deploy my capital. Like you, Steve, I'm looking in the biotech area. Like, XBI looks like it could go here. I think that's one that's a little bit more independent of SPX and all that other stuff. But I hate that sector because those stocks are just so tough. So I really just raised a lot of cash in the last 2 days, and I'm probably going to take a few days to see what happens and look at everything on the weekend and reassess. But it's been it's been a great run since October of 2022.
And for me, it's really mixed in terms of, are we extended or have we just corrected for a month and a half, right? Because if you look at the S&P 500, it's like, sure, we could talk about how new highs peaked on December 14th. S&P 500 just tripping higher. If you look at ARK, IWM, mid caps, biotechs, even financials, they've given back a lot since late December.
And as I look at, like I was looking at stocks because I know JC always wants a list, and I was going through stocks to see what I like. And what I really noticed different from the last few times I've been on your show, and I'm on, about once a month. So there's that time frame. There's not a lot of big bases that things are coming out of, right? Like to your point, Steve, and I like to buy when things come out of bases, right?
100%.
So a lot of things are extended. I would really like to see a rug pull. I'd like stocks like CrowdStrike, which I missed out on, to pull back 10, 15, 20%.
Yes.
There's a guy out there on Twitter who's been all over that. I can't remember his name. We actually had a Zoom call, and he was telling me like 6 months ago, this thing's going to go to the moon. And he was right. I missed it, So there's things I'd like to see pull back. There's some things that are in like little bases. Like if you look at Expedia, that looks kind of interesting. Things like Affirm look interesting, but I like those stage 1 to stage 2 transitions, and I don't see many out there right now.
Oh, Expedia, nice, Brian.
So the all-time high close for the S&P 500, 49.58.61 last week, 49.54.23 yesterday. So not quite a new 52-week high, but Friday itself, we did hit a new 52-week high in the S&P 500. Did the Qs hit a new high yesterday? No, right? No, they did not. So just to be clear, so we had a new 52-week high on Friday, basically yesterday as well. We were right there. Man, there were just no new highs on the New York Stock Exchange yesterday. There were 67. 67 and 0 is basically the same thing.
But if you look at the action yesterday, so we had that news come out about credit defaults, right? And a lot of stocks started to tank, and a lot of people in my Discord were like, okay, here we go, because a lot of people there are kind of bearish. And just like we've seen for the last few months, buyers came in. Right? Buyers keep coming in on these dips. Now, at some point they won't, but they've been relentlessly putting a bid under this market. So it's a tough market right now, I think.
I'm just not seeing it. I'm not seeing it when you actually go into the internals and see that you're not seeing that bid like you did all of last year. All I'm saying is that it's different. But Strazza made a great point. Great point. I hate to give him any credit at all. His head's big enough as it is. But the great point that he made is that you have yet to see the expansion in the new lows. And he's absolutely right. And that's why we haven't flipped the whole book short. Like we laid out some shorts, we bought some puts on S&Ps and Qs. These are just trades. It's not a lifestyle. We start getting an expansion in the new lows list. Now we're talking more of a lifestyle.
I also think, to really throw a wrench in this, if high beta versus low vol breaks out and it looks like it's about to, I think I don't think you want to be long puts at the index level.
Well, we have our stops, and when you're long, there's a reason why we're long puts, because you have an inherent risk management already built in without having to do anything else. And then we have another layer of risk management on top of that. And again, I hate to keep agreeing with Strazza. Couldn't agree more with the high beta, low volatility. Couldn't agree more.
It's close. Yeah. Like we got to watch these risk appetite indicators. I know you've been all over staples relative. We got to watch them closely because they are at inflection points, whether it's old lows, old highs. And if they do pick a direction, you might get a nice reaction leg in some of these relative trends. You start seeing things like ARK start working. God forbid the regional banks stop falling. Biotechs break out of this base. I think, this could all happen at once and maybe suggest.
None of those are bearish developments.
Right.
That's right.
Yeah,
And by the
look,
way, I don't give a shit. Like,
yeah,
the
I was
market,
just gonna.
the market
I
goes
was just gonna.
6,000 or 6.
Yeah. So I was just going to say that, like, the older I get, the more I've been doing this, words matter. And the way we self-describe ourselves matters, because you describe yourself, say, I'm a loser, you act that way. I'm a winner, you act that way. I'm really trying more and more to not say I'm bearish or I'm bullish, right? I don't want to tip on either side. I just want to be open, not unlike your daughter, to breakfast for dinner, to whatever happens, and so many people, I just keep going back to that point in October of 2022. So many people said, the market's going to go, it's going to tank. No one was looking at housing stocks, right? Interest rates are high, inflation's high, mortgage rates are high. We're going to go to a recession. And what were the stocks that ripped? Right, housing stocks. So that, again, I like to tattoo those things on my soul so that I remember them. And I'm just trying to be like, a little bit more neutral, a little more like water here.
Yeah, but you want to know something? Here's the
Bruce Lee
advantage.
reference.
Here's
Thank
the
you.
advantage that you have, Brian, and I'll put us in that category as well.
I'm tall.
Is that well? You do have that tall guy game.
You're tall.
Right? Tall guy game is real. Tall guy game is real.
Is it?
Yes. And you got it, my friend.
Yeah, but bald guy game is not. So that kind of balances it out. That's the problem.
It's a net win. Don't worry. It's a net win. Yeah. Totally lost my train of thought. What was I talking about?
How tall and good looking I was, something like that. I can't remember.
Totally lost. Oh, yeah. So we're data driven. We're market driven. So the reason that we're bullish or buying a stock is because we think it goes higher because the data suggests so. If we think the market's going to go lower, we think a stock's going to go lower and we're short, it's because the data suggests that that's the higher probability outcome. So when we start to get new data that invalidates that thesis, we move on to something else, right?
Yeah.
When your narrative is, government debt, labor, housing this, the economy that, the Fed this, the Fed that. Like, there's no data that's going to invalidate that thesis. You could just keep telling the same stupid story like a psychopath every single day, right? And there's no data that's going to suggest that you are wrong. For us, we know exactly what the market would have to do to invalidate any thesis we have.
So that would be that would be an uptick in new highs. That would be an expansion of breadth. Is that what would invalidate your bearish thesis? So for the listeners at home,
yeah, I mean, we're getting fewer and fewer stocks participating to the upside, which is the exact opposite than what we were seeing last year, right? For the last 18 months. Yeah. So if we start to get more stocks participating to the upside, if we don't get the expansion in stocks making new lows, that would be step one, right? That would be super bullish, right? I think that's the lower probability outcome. I think we get a correction into March. I want to be buying that dip in March. I might not. We'll see what happens. We're data dependent. I think that that's what we want to be doing. That's sort of where my head is at. Could change my mind next week, right? Well, let the data dictate. I mean, like every other time.
Yeah, and you make a great point, is that you have to have a methodology. And I think that's the problem, that most people don't, right? Whether you're bearish or bullish, right? They don't know why they're doing what they're doing. They're getting on the latest macro spaces and they're taking something that they hear and then they're curve fitting it to their own opinion. And I think that's why a lot of people, got their heads handed to them at the end of last year.
I like how Fami says that those macro spaces are like therapy sessions for perma bears.
Dude, speaking of Fami, I get a text and a photo last night, and it's Fami and my sister at a hockey game out in Vegas. I went out to Fami's 50th birthday a couple months ago, brought my sister, introduced them, and now they're running into each other, in Vegas. Like, my sister's like, I just saw Joe. I'm like, I know, because he's everywhere. Joe exists everywhere.
He's everywhere. He really is. He's in a lot of places. He parties. Good for him.
Yeah. He's a good
see
guy.
What happens when you don't have any kids, Brian? You see?
Yeah.
Strazza, you taking notes? That's how to do it.
Yeah, I have a good time.
We know.
Brian, any interest in energy at all?
You mean like in oil stocks? Is that what you're...
I'm looking for stuff. I'm looking for,
So the only thing that I've seen recently in energy, because oil's kind of started breakdown, is I saw Valero, who was showing a little bit of good relative strength.
Yeah,
that's the only one I saw on my list, and it's not a lot, but just compared to the other names. So I always think of oil as a longer. I think of that kind of like the uranium nuke stocks. Those are bigger moves. I don't think they're great trading vehicles. At least for what I do. So I haven't really seen anything pop up in that area right now.
Yeah. Yeah, we'll see. I don't know either. I was looking for opportunities in energy, and there's not much there. You can buy the lower bounds of some
The
of these.
refiners.
I like what he's saying about Valero, right? Because Valero and Marathon Petroleum tend to move together. They're the two big refiners, so there might be a catch-up trade there. That would make sense because of the strength from Marathon, but not really interested in the MLPs. The oil services names really not looking so hot.
If we're right on these shorts and the market does crap out here, I think you're probably going to get a relative bid in energy. Is where my head is at. I'm not positioned accordingly, but that's sort of how I see things playing out. We'll see. I don't know what the market's going to do next, right? But the good news is that neither does anybody else, no matter what they tell you.
I think that's a good lesson. I want to talk about that when we get into earnings.
What, the fact that we don't know what the market's going to do?
Sometimes you have to buy a stock. You don't know exactly if it's going to beat earnings or not beat earnings, right? I wish I had a crystal ball. That'd be fantastic.
I think Annie Duke says it best. And those of you who have not read the Annie Duke books, do yourself a favor. Go read the Annie Duke books. Start with Thinking in Bets, then read the other one.
The one on quitting is good too.
Which one?
The one on quitting, knowing when to quit, when to throw in the towel. It's a good
That's
one.
exactly right. Yup. She's fantastic. Love her. And what I would encourage you to do is read the book. But one of the things she says, and she reiterates quite often, is that in poker and the market for that matter, they're the same in this case. We are making decisions with incomplete information.
Yeah.
We have there are known unknowns and unknown, right? But we know that going in, right? So we don't have to be right every time. In fact, I think it was Nick Majuli the other day said the most optimal strategy in the market, running all the numbers, and he definitely is a math major. The most optimal strategy is still wrong 25% of the time, and that's optimized fully. So you got to know that going in.
Yeah, I heard a great quote kind of like that yesterday. There's two types of people in the world: those who are lost and those who don't know they're lost.
Haha, nice.
So
nice.
Yeah, poker's kind of like French food and pot stocks. It's not for me. It's not for me.
You
don't like French? You don't like French food?
Strazza,
No.
what is wrong with you?
Wow.
And poker, it just bores the hell out of me, man. I'm
Poker,
not.
you could take it or leave it, but French food, stop it. You and I need to have a sit down. Come on.
French food's a little overrated. I wouldn't say it's bad.
The two of you just go to the wrong restaurant.
No,
dude, I'll do Mexican food or Asian food every day of the week.
I will make fun of the French all day long, but when it comes to food and wine, they do not mess around. Stop. You got to give them credit there. Are you
great
kidding me?
Cheese, great bread, great wine ends there.
Stop. They invented culinary cuisine. Literally, they invented it.
They also invented the idea of putting sauces over everything to cover up the fact that what they were serving was crap. So
you ever have oysters in Paris?
You guys are going to the wrong restaurants. What's wrong with you guys?
Just go drink a cup out of the ocean. It's like all salt water in your mouth. I almost vomited at a restaurant.
I'm not with you there, Steve.
The two of you guys go to Le Bernardin, sit down, have yourself a meal, and then call me and tell me how terrible it was.
You think Le Bernardin is really French? Come on, that's Repair's.
Le Bernardin, what is it? Fucking Vietnamese? What?
Well, just because the name, like, I got a place around the corner called El Cholo, run by a Japanese guy. It's not Mexican. I mean,
nice. Well, we were at the pizza places in New York, and one of our clients turns to me and goes, "This is an Italian place?" And I'm like, "What? Like the Albanians?" No, that's right. Yes.
No, you had the Albanians giving us pizza at the first place, then you had the Mexicans giving us pizza in the second place, and then the Russians giving us pizza in the third place. 3 pizza joints, no Italians.
That's how you know it's legit Italian.
That's how you know it's New York, right?
Thanks a lot, Brian.
Thanks for having me. I appreciate it. See you guys in a month.
Bye, Brian.
Man.
Where are we going to see Brian next? Is he coming to? He should meet us in Sonoma.
Wait a minute. Is Brian from Newport Beach? I should have asked him.
Huntington.
Right.
Is that close?
Around the corner from Future Proof.
Yeah.
Okay.
Like literally.
Which they're already selling tickets to. Hey,
I'll be in Newport Beach. I have a wedding there in August.
Dude, it's so good. I love that. That part of California is so awesome. LA sucks, but you go south of LA, it's awesome.
All right.
I just want to say too,
I don't even hate LA that much. Most people do. I that's fine.
You might disagree with my French food thing. I'm good with food. Okay, I know
First
my
of
food.
all,
I
it's
know
not that
my
I
food.
disagree. It's that that's
I
just
know my food.
that's just an idiotic statement.
I know my food.
French food isn't good. What's the matter with you?
Okay,
I stand by
before we bring on Mary, I want to do at least a couple earnings reports here. Let's start with Snapchat, right?
Disaster.
This was the bar was high. Meta dropped the gauntlet on them last week and said, "Okay, your move, Snapchat," and they did not come through. So the EPS, what it beat by 2 cents, whatever. The sales was
That's
a little bit
not what it's
lower.
about.
I'm getting there. Daily active users up 10% year over year. If you look at their growth rate going back the last several years, you can see it declining precipitously.
Yeah, that's good. That's fantastic.
The growth rate? Well, if I guess Meta's growth rate is slowing too as they get more users. But let's talk about the ad business for a second, okay? Ad revenue for Snapchat up 5% year over year. Ad revenue for Meta up 24% year over year.
I don't know why you're comparing Snapchat to Meta.
It's the same business model.
It's not. Meta.
It's advertising. Yes, it is.
Dude, Meta is a monster.
I hate to agree with Strazza again.
Meta is a monster.
That's not right.
They got all these levers that they're pulling. Snapchat.
First of all, Meta also owns a shit ton of companies that people actually use, and Snapchat owns one company that nobody uses.
If you want to compare it with Twitter, I would say, yeah, great. But we don't have the data anymore.
No. It's advertising. It's digital advertising.
Spencer, take the L. Take the L.
All right. You're not going to grow like Meta. That's not. People aren't even hoping that.
Meta owns a bunch of companies that people use.
They should grow more than Meta.
Again.
Because they're smaller.
Meta owns a bunch of companies that people use. Snapchat owns one company that nobody uses. They are not comparable. And one has a market cap of what, 10 billion? Yeah, the other one has a market cap of $1 trillion.
Right.
Are you kidding me?
Right.
20 billion.
Trying to make money the same way. I get it. Ad revenue. They just don't have the reach. But I think it was the guide more than anything. Like people,
the guide was fine. I mean, the revenue guide was fine, right?
Thought Snap was turning the corner. They wanted some big growth numbers here. They wanted a big guide, and they didn't get it at all. The stock also, part of the problem is, look what the stock did in Q4, right? It was clearly pricing in some good news here. Didn't get it. You're gonna get some huge give back here. Also, NASDAQ Poppy, you're asking a lot of questions today. I understand. When you make a bet using any specific vehicle like this, in this case Snapchat, there are ways to limit your risk. I don't know for a fact that Snapchat's going to beat their earnings and that the stock price is going to rise. That'd be fantastic. If I did know, we could all retire. You have to simply stack the odds in your favor, right? And try to increase your odds of winning. In this case, Snap had just resolved higher from a nice base. And we were playing this through calls, which most of them expire tomorrow or next week. So now there's zero. You lose a couple $100 and you move on.
Snapchat they were also cautious due to I guess they're saying that the war in the Middle East is causing headwinds for them. I don't know, I guess they're saying it. I don't know how much I buy that, but they're saying it. So
yes, they blame the Israel-Hamas war for something. I don't understand. What does that have to do with their business?
I'm unclear to me, but that's what they said. So
yeah, saw that. Strange. Let's talk about a good one. Let's talk about Uber, because these guys, money printer just keeps going burr over here at Uber office.
Earnings per share 66 cents versus 17 cent estimate. That's a very, very large beat. Revenue of 9.94 versus $9.76 billion. So a nice beat there as well. The guidance, what?
And gross bookings, you got that?
Yeah,
too?
the gross bookings guidance was good. Yep. They guided 37 to 38.5 billion on that, which was good. The adjusted EBITDA guidance was good too. You'll see a lot of headlines today about them being profitable on a full year basis. A lot of that was just due to some investment gains they had. But it is a fact that they were profitable on a full year basis. So
they beat the EBITDA estimate by about 5%. That's big. The EPS came in way above. The GAAP EPS number is not really something you want to pay too much attention to. What made that such a big beat was the equity gains. Right? Yep. So they have these equity investments in whatever it is, Didi, Grab, all these other ride-hailing services around the world. That's what juiced the EPS number. But that aside, it still would have been a beat, just a slighter beat, like 5% beat.
Mhm.
It's the revenue numbers. These guys grew market share in their 10 largest markets on delivery basis. So not only are they already dominating, but they're growing their reach more and more, taking more market share. So this is what I'm talking about when I say like it's really a winner takes all game in this industry, and they are the clear winner. This was a monster beat, a great report. The market had already priced it in. This thing's been down 2 weeks out of the last 15 weeks. So the market already priced it in. A little bit give back here. If you get this thing anywhere as close to 64, the low 60s, I think that's a gift. That's an excellent level to redefine your risk, for a new position. But Uber's an absolute monster. The cash flow these guys are generating is just so impressive.
And then let's move on to Chipotle. Steve says that we don't know whether a company is going to beat or miss. I should have known this. My bad. I should have told you guys based on the number of times that my household has been to Chipotle in the last 6
How
months.
often you going to Chipotle a lot these days? I haven't been to Chipotle in a minute.
It's not me. It's my wife. She's
I
obsessed.
used the bathroom at one of them once,
She's
like maybe
obsessed.
6 months ago. But
It's like every 3 weeks it feels like.
What does
we're
she
there.
get? She gets the burrito.
It's a bowl. It's always a bowl. But in any case,
She pregnant?
No. All right. EPS beat, revenue beat, same store sales beat. They authorized a $200 million buyback. Okay. And they guided for same store sales and growth in the mid single digit range. So good stuff.
Can I make a confession? I have a confession.
Yeah.
As much as I abuse Mexican food on the East Coast because I got bougie when I lived in California, I was friends with all these Mexicans. I don't hate Chipotle. I don't hate it.
Chipotle, I like Chipotle. I'm not criticizing it. We go, as I'm saying, we go there. It feels like quite a lot.
As a hater, as a self-proclaimed hater of most Mexican cuisine, I don't hate Chipotle. I mean, it's fine, but I don't hate it. I don't hate it.
Chipotle invented a new kind of restaurant. They invented the fast casual model that has been emulated.
And then what other restaurants are fast casual? Like Wingstop?
I don't know if I'd call it that. I would say Cava. I would say all of the Chipotle imitators. We got Moe's, you got Qdoba.
What's Moe's?
It's a Chipotle.
Moe's was around before Chipotle.
Were they?
I think Qdoba was too.
I don't know. I think
Chipotle copied them.
You think all this stuff at Chipotle is actually fresh? They don't use refrigerators?
Of course they. What? Of course they use refrigerators.
You can be fresh and be in a fridge, Strazza. I don't know.
Well, never frozen. Then what's the thing they say? Never frozen.
No, that's
Wendy's. Freeze anything? They've never frozen anything. I don't know.
Yeah, I don't know.
I don't know.
Anyway, Shake Shack is fast casual. Rachel, Cava is fast casual. Panera is fast casual.
Yeah, Shake Shack. You could get a White Castle sized burger for $25.
Shake Shack overrated, no doubt.
Great value proposition.
Chipotle looking good this morning. We had a lot of other earnings. I don't know if we want to cover any of these, but we
anything good, anything worth talking about? Or not really?
I don't know. We had Ford. This is trading up this morning. Enphase up 20% this morning on their
saw
report.
That. Wow.
Yeah. So, Yum China had a good report. Yum C. Big loser.
This Uber report is so good. It's so good. These guys have $5.5 billion in cash and cash equivalents. The more I look at the Uber report, the more I like it. Dara was on, I think he was on one of the networks this morning. I'm going to go watch that after the show. That's the big report today, though. Right?
Can we do a little hot corner, because I'm really interested in some of these biotechs.
Yeah, quickly, and then we're going to bring Mary on. And then the other non-earnings headlines were New York Community Bank, NYCB. They got the downgrade yesterday from Moody's, and today they announced a new chairman.
Stock's down 75%. Now Moody's downgrades their debt. Thanks for nothing.
Mm-hmm. And then this new sports streaming thing, ESPN, Fox, Warner Brothers Discovery teaming up to launch a new sports streamer. I give it a 50-50 odds that it happens. But all right, let's do hot corner, and then we'll bring Mary on.
I love
hot corner. So hot right now.
All right, Strazza, what caught your attention? Because what caught my attention was that 13D from RA Capital, increasing their position in Tyra Biosciences from 16% to 20%, adding to positions that are working. Thoughts?
Immunicore, baby. IMCR. The boys over at Wellington Management. We know some people.
Shout out Wellington.
Yeah, shout out Wellington. This is the original filing, taking an 11% stake, piggybacking on the Baker Bros. Now we got two of my favorites involved with big positions. I still think Baker Bros is going to get bigger in this. I don't know why they own yet. We're looking out for it. What?
How much do they own?
I think it's like 5%. Small.
They only own 5% at this point. When did they start buying the Bros?
In fact, they just dropped under 5%. They sold a little. I'm not sure why. Sometimes these filings, you don't know exactly why they're selling. It could be
Do you
like.
think are the Baker Bros trading in and out of this a little, kind of like managing positions, and then just the filings kind of coincide with some of that?
I think so. Like they trimmed a tiny bit. That could be tax stuff. That could be a lot of things, right? So I'm not overthinking it. I think they eventually get bigger. The bottom line is find a biotech chart, right?
Go to slide 2. Go to slide 2.
We know Regeneron, Vertex. We know what those look like, right? But find a biotech chart that's smaller mid cap like this, that's just ripping to new highs out of a base like this. It's as good as it gets. So,
how pretty is that, man?
I'm long. Big fan of this one.
Yeah,
big
it looks
fan.
fantastic.
So listen, when you get one big institution or biotech investor in it, it's great. When you get two, fantastic. So they just keep coming for IMC.
Yeah, but is Wellington a biotech investor? No.
They're
not like the Baker Bros. They're just
they're hedge fund.
They're just a really good investor.
Yeah. I mean, they must have technicians on their staff.
Well, I was gonna say our friends. We used to have friends that ran that joint. Now we don't anymore.
Yep.
But I guess we have the people their mentees are now running it. I don't even know. I'm totally making this up. I have no idea. But Frank Teixeira is no longer there. Right?
Yeah.
Shout out, Frank.
David. So this one really stands out. We have the banks if you want to go back to the table. But as long as you're above that shelf of former highs in IMCR, the risk is to the upside.
What about Tyra? Go to the next one. Go to about Tyra. So we're looking at what? Tyra, this was, again, a 13D filing. They increased their stake to 20% of the company. That's not nothing. It's a little bit under $1 billion. So just understand that. Is it making new all-time highs like Immunicore or something like that? Maybe not, but, I mean, this is worth a look, no?
Yeah. This one looks good in the world of biotechs as well. The reversal certainly appears to be in. It's a little thin though, no?
Is it?
Just looks like it. Sometimes you can tell by the candles.
No, I know it is super thin. You're right. Yeah, be careful with this. I mean, it's almost 800 million, so it's not that tiny. It trades 100,000 shares a day. Yeah, it's a little thin. It's a little thin. Be careful.
Flip it back to the table. I think we had a bank in the mix here as well.
What else is new?
Yeah, community bank.
Immunicore is much more liquid. Immunicore is almost $4 billion.
I think the bigger point about today's table is the continued theme of banks and bios that we've been talking about since October, November of last year. The banks and the bios, and I know there is a denominator bias because there are more banks and bios than any other kinds of stocks.
Yes.
But this is still unusual, more activity than we're used to seeing for these two groups. So it just continues to stand out. They just keep hitting these names. So TCBI.
No, I don't like to overthink that because of what you just said, the denominator fallacy here. There's just a lot of them.
But we have a benchmark. We know what we're used to seeing, right?
We're used to seeing them all the time. And we keep seeing them all the time. You're suggesting that we're seeing more of it.
Yes. And I've been suggesting it since October, November when it started. I keep saying
All right. I believe you.
TCBI looks okay for a bank, but I think the big one is the Bancorp, TBBK.
The Bancorp, Delaware-based. I love their name. It's just the Bancorp. Like they just own it. Like they are. Like how like we are the morning show because if you're watching anything else in the morning, your life has gone horribly wrong.
Oh yeah,
they kind of pulled one of us and kind of just owned it. We're the Bancorp.
Yeah, no, it's a great name. Keep it simple. You know what's not a great name for a bank? You ever heard of Fifth Third
Fifth Third Bank. Yeah, it's in Ohio. It's a terrible.
They're big in Michigan.
These guys are
yeah.
supposed to be good at math. These bankers. There's no fifth third. You got
No,
three
it's a terrible
thirds.
name. It's a terrible name.
So I was
It's like it's a California pizza kitchen. Like, really? Could you think of a worse name? That's a
not a
terrible
thing.
name. It's like
So-
saying like Nebraska sushi. You know, like what?
So I was complaining about this on one of the shows last week, and somebody said it was actually Fifth Bank merged with Third Bank.
Oh, is that the story? Oh, fun
That's
fact.
the only answer I would have accepted.
That's a fun fact. That's actually all
Makes
right.
sense.
All right.
Makes sense.
Did you know
right,
that Morgan from Morgan Stanley was JP Morgan's kid or nephew?
Hmm?
No, I didn't know
Oh,
that.
I've been
Morgan's-
watching. Yeah, Morgan from Morgan Stanley was JP Morgan's kid. It's a kid. I think it was JP Morgan Jr. if I'm not mistaken.
Wow.
Yeah.
All right.
I've been
I'm
watching
bringing on
these like
Mary.
late night documentaries about like billionaires from like 150 years ago.
He goes down the rabbit hole. He starts watching documentaries that were made in like the 1960s.
I do. I really like. I really
black
enjoy
and
them.
white.
They're really hilarious, actually.
I'm bringing Mary on.
Mary.
Hey,
first of
guys.
all, can we throw it up? Can we give Mary her flowers? Give it to her. Give it to her.
Hell yeah. Where's the image? There it is. Up on the screen.
Where is it?
Right there. Boom.
Mary, CMT level 1. Let's go.
Let's go. Yeah, that was a big deal. And what's so ironic is I got my results when we were in New York at the event. I actually went and talked to Tyler first. I'm like, Tyler, is this for real? Because I thought, maybe a mistake had been made. And yeah, so it was a big thing. I didn't tell anyone on the team, mainly because I didn't want y'all to know. And if I failed, then y'all looked out on me
Oh,
failing.
Mary, come
So,
on.
yeah, it's quite frankly, hanging around with you guys for the last couple of years has taught me so much. And, I've always wanted to continue learning. Sometimes hard to teach an old dog new tricks, but trying to learn new things and become better at investing and trading. And so I thought this would be the next step. And why not take a test and see what happens? It's been a minute since
I can't
I've
believe
studied
you
for a
didn't tell
test.
us, Mary. I feel like so out of the loop. I didn't even know.
Actually, I should say Peter knew. He was actually the one that kind of pushed me into, taking the test, starting to study, take the test. And Ian also knew because he and I actually have a very similar story.
I'm the
He was
last
very
to know?
encouraging.
Like, what is this? Huh?
You didn't know. Yeah, Strazza didn't know. They were the only two. Even Carrie and Brett didn't even know. So
Wow, you didn't tell Carrie and Brett either?
no,
Wow.
nope, kept it close to the chest.
It would have come out of my mouth. Give me 2 glasses of wine. I'm telling everybody.
So that was fun to get the news while we were all together there at the
Congratulations.
event. Thank you.
Awesome
Thank you.
stuff. All right, and then Mary, you just got back from Cabo, right?
Yes.
nice tan.
Oh, thank you. Yeah. So last week I was in Cabo, actually with Carrie and Brett and some other friends, and yeah, first trip really without kids. So I haven't been trading a lot. Not going to lie. Trying to stay in tune with the markets, but kind of just managing positions that are already on. And was very, very appreciative of the conference call that took place earlier this week.
What are you
just
shorting?
because-
What are you shorting, Mary?
Not shorting anything yet.
Are you shorting Dell with us today?
I don't know. I guess, we'll see what we talk about at the analyst meeting,
Short
right?
the shit out of that bastard.
You guys going to miss me on the analyst meeting today?
You're not
Oh,
going to be
you're
in the
not there?
analyst meeting?
I've been saying this for like 2 weeks now.
Oh, wow. It's going to be such a much better meeting.
That's harsh. I don't know what show I'm on, actually. I mean, JC, the number of times you've said today, oh, I agree with Strazza. Like, I thought I was in the Twilight Zone listening to today's show.
Well, he was saying less dumb shit today.
I guess there's that. It must be nice for Spencer, though, to have a
Anyway.
break.
We'll see.
Yeah. All right, let's do some recess and get out of here.
Please. All right, my recess is I'm shorting Dell. What do you got?
Why Dell?
Because I think it goes lower and I could buy it back at a lower price.
You're just looking for like some of the strongest stocks to sell.
Nope, I'm looking for stocks that I think I can short here and buy them back at a lower price, and Dell is on that list. I like names that are not getting overbought. I like names that are breaking down and not holding their breakouts. We call those failed breakouts or whipsaws. They tend to happen at turning points after breath has been deteriorating for a while. I've seen these before. You know, if it walks like a duck and it talks like a duck, then it's probably not a chicken.
AbbVie getting that breakout.
My recess is I was reading over the weekend about Girl Scout cookie inflation. It is almost Girl Scout cookie season. I think the season starts middle of February. And check this out. This is interesting. So let's say you sell a box of cookies for $6. All right. This is sort of like the breakdown of where that money goes. So $6 box of cookies, that's what you pay for. You pay for it. About $1.30 goes to the bakery. $3.73 goes to shipping, restocking, credit card fees, and to the local council. And the remaining like 75 cents goes to the troop you bought it from. I thought that was interesting. I never thought about this before, but thought you guys might find that interesting.
Boxes are $6 now. Like when I was a Girl Scout, they were $2 or $2.50. Of course, that is probably showing my age.
Dude,
So-
the coconut ones with that are circle with the lines.
Yeah.
Samoas. They're called Samoas.
They were caramel delights back in the day.
They're
But
called
yes.
Samoas, Strazza.
Inflation.
Inflation.
Dude,
Yeah.
we were at the Lowe's the other day. We took the whole family to the Lowe's, and there were some Girl Scouts selling cookies. I was just walking around Lowe's, buying light bulbs, eating cookies. It was lovely. Perlman, earmuffs.
Yeah, seriously. Spencer, do you have my picture from Cabo? So we, this is my recess.
Oh yeah.
Didn't even talk about charts. Sorry, guys.
You
I've
saw
had
a
couple,
whale?
but- Oh my gosh, you guys. So here's what you need to know about Cabo in January, February, March, especially like right now. So the whales from Alaska come down to the Sea of Cortez and they have their babies there. And so just huge population of whales in Cabo right now. And this was a mama that we saw. She had a baby with her and they were just jumping. I mean, the amount of jumping and slapping and flopping. And I mean, we just saw I can't even begin to count how many whales we saw. This was on our whale
is this
tour.
a blue or a hump? Is this a humpback?
That's a humpback, yeah. So, yeah, this was one of the whales that we saw. Another funny thing that happens as you're going back into the marina, like the sea lions will jump up on the backs of the fishermen boats, and they're looking for the handouts from the fishermen. So the fishermen are, throwing them fish, and so you see all these sea lions riding on boats back into the marina. It's just comical. So, highly recommend Cabo. I've got lots of other places that if you're looking to go, got lots of recommendations. But we go
Cabo is
every year. Yeah,
awesome.
That is so cool.
It's so nice to get away from Michigan in the winter. So I very much appreciated the sunshine.
And every day's a beautiful day, Mary. Right?
really
It's not like
is.
you're going to the Caribbean where like you'll get rain and that not in Cabo.
Yep, dry heat. So it was wonderful. And like I said, whales are fantastic right now. So if you're headed to Cabo, I've got a gal. She's awesome. She gets you like right up next to the rocks, so you can put your hands on them. Crazy. Yeah, good stuff.
Whales are
Well,
cool.
I saw this image, Mary. My first thought was, is that the Pack Life logo?
Right? I know exactly.
Looks
Nice,
just like
nice,
it.
Yep.
Nice.
All right. Anyway, that was fun.
Did they really just launch a short regional bank ETF? Because that's some good information.
Time to go long.
Did they?
Tuttle Capital
These
Inverse SKRE.
Oh.
Well, regional banks are
not the
down
best- not-
almost 3% today. Getting the shit kicked out of them.
Yeah,
Not the best
that's what I'm
track
saying.
record of attracting AUM there. So, yeah. I don't
Is that the only one?
Uh,
I
yeah,
see
so this year-
SKRE. I just saw it in the chat. What?
I don't know.
If you're going to Cabo, stay at the Cape Hotel. Cape.
This
Spencer?
sports streaming thing is interesting to me. Yeah. ESPN, Fox, and Warner
yeah, I saw
Brothers
that.
allegedly launch a new streaming platform. Yeah, very
New app.
interesting. Let's see if it actually happens, but it's going to be about probably around $50 a month for just sports. About, I think, 2/3 of all the sports leagues in the U.S. So we'll see.
I just
okay,
canceled
cool.
my
That-
ESPN Plus.
I don't have it.
You have an issue? What's the
Um,
matter with you?
Hmm?
Spencer can't hear anybody. He's on delay.
Spencer, end the show.
End the show.
What's wrong with my delay? Okay, fine. Whatever. Moving on. We're done. It's Wednesday. No hot corner today, right? Hot corner
No,
on
Friday.
Friday. right, Steve?
Wonderful.
Okay, cool. So see you guys later. Go make some money. Smash the like. Thank you very much.
Love you, Spencer.
Bye, guys.
Love you all.
Adios.
Run it. I can't take no loss. I don't even know what it costs.